The markets closed the week with a wave of energy across indices and commodities. From silver's uneasy drop to oil's expected decline and natural gas curious setup for winter. This week had it all. Add to that uranium's sixfold rally since our April call and the S&P 500 powerful Friday swing. And we have a setup worth every chart. Let's dive in. And today's digest, we start with the commodities section. The first item here is silver. What's going on here? First of all, I'd like to say that this chapter here is just an excerpt of a much bigger, stronger, and solid discussion that we had for silver, gold, and GDX in our weekly reports. So just to give you heads up. The daily closure of silver on Friday was a bearish inside candle. So it is entirely within the upper week of the Thursday's candle with good chances to move lower. And the weekly, technically it formed three white soldiers. However, I call this pattern a runaway train because some technicals are strongly suggesting that it might be a reversal coming very soon. Now let's have a look at the wave that silver made on Thursday and Friday. So it started on Thursday with an impulse down. I think it's one of the clearest waves that I've seen recently, especially impulsive waves down. We can consider this wave 1 or A. Now we have potentially wave 2. It could be even completed if it moves a little lower. Let's say it opens today in a couple of hours at a new lower low, completes the first impulse for wave 3, and then a little bounce, and the wave 3 completes somewhere here between 44 and 41. But at the same time, I cannot exclude the potential for a bigger ABC formation. As I marked here in red, it would be an ABC, and if silver moves somewhere here between 46, 44, finds a bottom here and jumps higher, I would be looking for the next moves. Well, that's all I wanted to say for silver, and if you're interested in our middle term and long-term projections as well as technical analytics and some statistics, I would highly recommend you to join our service and look at the weekly reports. Well, now let's move on and have a look at oil. Oil has been dropping, and we've discussed this potential, especially after two rejections of this level on the daily frame, expecting a move down. It was a huge one, and it's not only for the daily, for the weekly. Oil formed a continuation candle, and it looks like the 8-day is getting along and might even extend the bearish odds. If we look at the chart, so this is the chart that I shared on July 29th. This is the one, and the oil was 68.7 at the time, and saying that there is a good chance it would move towards these levels. So far, oil lost about 16% of this call. And at this point, I'm not seeing a reversal pattern. Although I'd like to say that oil has been grossly oversold on a couple of smaller frames, and it would be absolutely normal to expect a little bounce on Monday. Well, this is the latest call on oil that we had on October 8th, saying that after a mini double top and the completion of the flag, oil has a chance to drop, and it did. And now it reached the target of the flag target here, but I'm thinking that it has fairly high chances to move lower. Well, this is the perspective. And now, if we look at the weekly closure of oil giants, ExxonMobil, Chevron, and the ConocoPhillips, we can see there is a confirmation candle here, confirmation candle here, and a confirmation candle here on the weekly frame. So the chances for a lower low are significant, and the corporations might be moving downward. If you're interested in our take on Exxon, the long and midterm perspectives, the report was posted on the website yesterday. Now let's move on and have a look at natural gas. So what we are seeing here is quite interesting. On the daily frame, we have a bearish formation, and on the 3-day frame, we also have a bearish candle, bearish engulfing. However, on the weekly, natural gas has been trying to decide the level which it would close, and until the last minute, technically it wasn't clear whether it's going to be a bearish engulfing or inside down candle or a bearish harami. It ended with a bearish harami, and now we require a confirmation for the move, which might come only the next Friday. However, at the same time, natural gas formed a few larger candles, which we discussed in details in our weekly review, again on the website. So this is the wave that natural gas formed of the most recent top, and I would say that this wave is likely corrective. For the first wave isn't ABC type corrective one, so this one is an impulse, and it might move even lower. If we look at the slightly bigger picture, this is the chart that we've been tracking after this call on September 23rd, saying that this is the flag target wave 3. So natural gas hit the bottom of the target for wave 3, and now is retracing in the corrective manner. So if it finds its support somewhere in this area, it might even go up to here without crossing wave 1, and it still be a valid wave 4. Let's see if natural gas finds support, and if it maintains an impulse upward. If it does, we would be looking for a much bigger and stronger rally. But for that, tune in for our daily reports on natural gas, where we discuss candles, technicals, and other elements for the daily forecasts. Now let's move on to uranium. Uranium, it's another strong forecast here. So on the daily frame, we have a bearish candle. Most likely it will push the price a little lower. However, on the weekly, I cannot say it's entirely bearish. It could be even a bullish continuation, depending on the next closure. I would say it's a neutral, slightly bullish. And the 15-day frame, which is closing tomorrow, it could close with just a neutral candle or a consolidation one. At this point, I'm not ready to call it a spinning top or any bearish candle. If we look at the URA global uranium charts, this is the chart that we shared on May 10th when URA was 27. Right now, it's more than doubled the price, and we extended this potential level for wave 4 for wave 3, to up to 84. And I think that at this point, URA is approaching wave 3. Well, that's for URA, and another instrument that we are covering for uranium is Energy Fuels Quad U. So the daily candle is leaning bearish, however, it requires a confirmation. The weekly is still bullish, and it would require a strong bearish effort in order to revert it. 15-day, it looks like it is going to be bullish. And now this the most interesting part. First of all, it's this chart, the one that we shared way back in April, on April 9th, when it was 3.81, saying that it is facing an enormous rally towards 523 or higher. And this is exactly what happened. And if we measure this from approximately this level, it's already gained 500%, which is sixfold. Well, amazing call, goes to our archives. And now this is the chart that we discussed last time. I've made minor modifications here. So this is most likely wave 3 is forming here at the top of it. And I would be expecting a sharp wave 4. And after that, another wave 5. And for uranium, note that the wave 5 could be longer than wave 3. But that's just an assumption at this moment. Well, that's all for uranium. And now let's talk about the stock market, and we will start with S&P 500 weekly analysis. So that's with S&P 500 dropped hard on Friday, and the move was pretty much expected, that the index would go down. However, I wouldn't expect that much. Well, so we have a bearish daily frame and the 2-day frame as well. So it closed with strong bearish candles breaking through multiple support levels. On the weekly frame, it also somewhat alerting, because the weekly price lost the 8 days EMA and 8 weeks EMA support, something that last time happened in February 2025 before the big move down. Well, it still needs to be confirmed next week, and we are looking for confirmation. There were also quite a few other signals that we discussed in details in today's the weekly report that was earlier shared with members. So this is how major sectors closed the week: SPY, QQQ, DIA, and IWM. Well, all of them made bearish engulfings, and the expectations for lower, for a move lower, are significant. But if you're interested in Nasdaq, yesterday we discussed again in the weekly report on a short, mid, and long-term frames, the perspectives for Nasdaq. By the way, I'd like to emphasize that all statistical calls that we shared recently for Nasdaq and SP 500, they remain intact. Now let's have a look at the Elliott Waves. So this is the chart that we've been tracking very well since April 22nd. This was the latest update to it on July 31st, when we said that the final wave, the final pullback for wave 4 and wave 3 or 5 are coming towards 69, and this area was identified a little later. So now I'm still not certain about which path it's going to take, whether it's going to be a green one or it's going to be a purple one. So for the purple, we would have a smaller pullback. For the green one, I think if S&P 500 drops into this area, we would be looking for wave 2 and followed by wave 3, which would be a strong and solid move. And if you look at the smaller frame, this is the 15-minute chart, and this is the chart that I shared with our members on October 9th, saying that we had a very first impulse down, and if you have gods of steel and other elements for shorting, this is a good setup. The stop loss would be a new all-time high, which never happened, but it was very close to it. And I was expecting a drop towards 6630, 6640 for potentially for wave 3. However, it moved much lower than that. And now I'm looking for a potential ABC formation here, because it was another impulse down, making wave A in parentheses as a zigzag. So we have a very first a corrective wave and another wave B, which didn't make a new all-time high, and an impulsive wave C, which stretched almost for more than 4 times the length of wave A. Now it is sitting close to the 50 days moving average support line. At this point, I would be entertaining 2 potential paths here. One is the end of the correction here at the 50 days moving average, and we have an impulse up. Or this wave down would be just wave A of a bigger correction, ABC, something like this, maybe a sharp zigzag, and the wave C even sharper, somewhere towards 100 days moving average. That's my hypothesis right now, but tomorrow we will see what kind of candle and what kind of events will be accompanied the index and the other indices on the US stock market. And obviously we will project our path, small short-term path, in the daily report. Now let's move on. So this is the weekly closures of the large caps and also the major sectors. We discussed them in details in our weekly digest, weekly strategy digest, which was shared yesterday on the YouTube channel and also posted on the investingangles.com. And if you like, you can check them there. Now let's talk about some specials. Nvidia. First of all, I'd like to say that Nvidia made a very strong bearish move on the daily frame. However, the weekly closure wasn't as bearish as the daily, and it's only a bearish harami, which requires a strong confirmation. So we need to see how it closes the next week, and we might be hinted tomorrow, because this is the 5-day frame which is closing tomorrow. And if Nvidia drops about 0.5%, closes below 182.08, I'm giving you exact level, we will consider this as a bearish engulfing and a hammer at the same time. And the next 5 days would be quite bearish, I would say. Anything above this level would be either neutral or even bullish, depending on the closure. Now let's have a look at the charts and what we are seeing here. This is the chart that we discussed last week, and what I can say here that Nvidia formed an ending diagonal for the wave 5, and that probably explains the sharp drop here. Let's see how far it would go. If it drops below 164.07, I would be considering this as a possible double top with this particular target 140. However, the double top could be more significant, and we might see an even bigger decline towards 115, just to make it round. So this would be the wave 2 and that's what be retrace of 0.786 of the entire length of wave that started in April. So this might very well complete the wave here. And I'd like to say if Nvidia drops here and gets support at this line, we might see an extension for wave 3, for example. And at the lower, the smaller frame, 45-minute frame, this one, Nvidia has a chance to form an impulse down. This will be an extremely unfortunate event for the bulls or for the recent buyers, because this would be just the very first wave of a potential correction. So I would be looking for potential zigzag towards these levels. So that is it. However, if it doesn't make an impulse here and starts converging here and forming an impulsive wave upward, it would be a different story and we might see an extension higher. So I would say that Monday is a very pivotal day for Nvidia. Now let's talk about the other giant, Microsoft. What we have on the candle, in the candle department, we have a confirmation of the daily top, and also on the weekly frame we have a bearish engulfing, which is also a hammer with a loss of 8 weeks moving average, which could be crucial. I would say that 8-day frame also have a chance to move a little lower. So Microsoft is bearish on the daily and the weekly, and if we look at the frames here, so this is so let's start with this one. Last time we discussed this one on September 7th, so I want to update the date. So today is October 12th. This is the chart that we shared way back in June when Microsoft was 470, saying that this is developing wave 1, possibly then it's going to be wave 2, 3, and 4, and so on. And this would be a flag target for the current move. So as we can see, Microsoft moved right into the flag, and it hit 555.45. So just a little higher than the hour lower boundary, and now it's potentially forming wave 2. So the chart remains unchanged generally, and now we would like to see what's happening here. I'm looking at this as a wave 1, 2, 3, 4, 5, wave 1, and this was wave 4. I was thinking at the beginning it could be wave 4 with the potential for wave 5. However, now I'm changing this because this was an impulse, most likely an impulse down, and the wave up failed to form an impulse, and now we are looking for wave C, potentially somewhere here. So this would be an ideal target for wave C, and the target will be 479 approximately, and 450. Okay, so 481. 481 to 450. This would be my target area for the move downward. And again, this chart was discussed last on September. Now it's October 12th. So let's see what happens with Microsoft. And this was the initial chart that we shared way back in June. So now Microsoft almost hit this target. So it ended with 555, and our target was here between 560 and 570, fairly close. Well, that's all for Microsoft, and I'd like to share another special for another index across the ocean, Nikkei, Japanese stock index. What we are seeing here, a very strong bearish move on the daily frame, potentially a double top here, and at least this is a tower top from candle perspective, or a double top from a bigger frame. And on the weekly, this is incomplete dark cloud cover, which requires a confirmation. And the 10-day frame, well, we need to wait another 9 days until we see a result here. So right now it's bullish on the short-term frame and the neutral leaning bearish. Oh, pardon, it's bearish on the short-term frame and the neutral leaning bearish on the weekly and bigger frames. And this is our call on June 29th. So this was the target that we discussed then, 47,200. This was an ideal for inverse head and shoulders. Well, it surpassed it and reached almost 49K. So that's one target, and at the same time we called this one. It was a flag target also on June 29, and the chart was the target was pretty much the same. Now I have an overlap, two of the targets. This is the inverse head and shoulders, and this is a flag target. So it is right in the middle of it. And now reading, by the way, it added 20%. And now I think we need to wait on the sidelines, waiting for another strong setup. And now let's talk about our swing room.
Frustrated with lackluster returns in your trading or investment accounts, even your 401k? At Investing Angles, we provide quant-driven swing trade signals and daily market analysis, consistently delivered stronger results than the S&P 500. In fact, our trading room achieved a 41% gain that work across all account types. Scan the QR code or click below to start your free trial today.
Our swing trading room went cash on Tuesday, October 7th, and remained in cash on Wednesday, October 8th, patiently waiting the next confirmed setup. Signals for October 9 and 10 were available to live trade members on the website. Over the past 12 months, our unleveraged swing portfolio delivered 41% compared to the S&P 500 17. Thanks to Captain David's consistency, risk discipline, and exceptional timing. His system continues to outperform cycle after cycle. And now let's wrap it up. The week was rich in signals. Silver showed a worrying move off the top, one that demands close attention, and do gold and the miners. We discussed them in our weekly reports. Oil hit our target zone and now faces a possible pause or reversal. Our daily reports track every step. Natural gas looks poised for more upside, and perhaps the candles are whispering something about the coming winter. Uranium keeps shining, a stunning sixfold rally since our April forecast. What a journey! Among equities, the S&P 500 made a large move on Friday, giving bears a window to test the larger frames. Stay tuned, next week could be decisive, especially Monday. Nvidia faces a pivotal Monday too, while Microsoft struggles to regain upward momentum, now risking a lower low. Across the Pacific, Nikkei's spectacular rally, first called by us in June, has reached its natural end. The sidelines now await for the next move. This week marks 5 years of Investing Angles, founded on October 11th. 5 years of charting markets before the crowd even blinks. A heartfelt thank you to all members, analysts, and supporters who've been part of this journey. For deeper insights, Read the written weekly reports featuring Nasdaq, ExxonMobil, and more. For a full strategic view, including volatility, the dollar, yen, Canadian dollar, BDI, TOT, and S&P 500 sectors and large caps, check out our latest strategy digest for member only. Start your 7-day free trial for access to all written reports, swing trade alerts, and Discord discussions led by Master Trader Kyle. Like, share, and comment to support our work. And remember, at Investing Angles, we chart the charts before the crowd even blinks. Thank you for watching.